please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Those are HDFC Bank's numbers coming your way. 4642 is actually in line, bang in line with what we were expecting. 1.29% in terms of asset quality is quite good. So I think asset quality has been maintained once again for HDFC Bank. 0.44% for the net NPA as well. I think there should be no complaints over there. We should also try and see what the absolute number is in terms of the asset quality. Provisions on a quarter-on-quarter basis have come down a bit, but on a Y-on-Y basis, there is a bit of a spike, so about 1,300 odd crores in terms of provisions. But all along, I think the numbers are looking good for HDFC Bank. The key to watch this time around would be what the loan growth looks like. I think anything above 20%, Abhishek tells us, would be seen as positive by the street, as well as NIMs above 4.2% will look good. 10,314 in terms of the NII is another good number, because our own poll had thrown up about 10,200 odd crores. I think we have the first reactions as well coming in. Krishnan, ASV of SBI Cap Securities, joins in. Hi, Krishnan. We have just a few basic numbers for you. I don't know if you've gone through all of them, but how are things looking firsthand?
So yeah, I mean, we weren't expecting too many surprises from the likes of HDFC Bank anyway. So to that extent, from what I hear, I believe the NPL numbers are fairly in line as well. I think there's probably a 10% sequential growth in advances. So that's a bit surprising given the kind of environment that we are in. Sequentially between September and December, we saw a 15% print coming from Yes Bank yesterday, a 10% number coming from HDFC Bank yesterday. So very clearly these are trends that are continuing to show that private sector banks, in terms of their market share, are doing what they can.
Right. Do stay on with us. Manish Ostwal of Nirmal Bank Securities also joins in. Hi, Manish. Good afternoon to you. What's your first reading of the numbers? As usual, nothing out of the ordinary?
Yeah. HDFC Bank, as usual, they reported very consistent performance, both net interest income and operating performance. Core operating profit at 8,451 crore versus 7,817 crore last quarter. And a very strong loan book growth. That is basically a trend reversal in the entire sector, because HDFC Bank, being a larger player, growing a 10% book on quarter to quarter is a very big positive surprise for the credit offtake to improve in going quarters. And secondly, in terms of asset quality, broadly the headline numbers are quite stable compared to last quarter. So overall, the very consistent performance from HDFC Bank.
See, if you look at the loan growth is at 28% on a YOY basis. This is perhaps the highest loan growth in last, let's say, about 6 to 7 quarters, or let's say in last 2 years. This is the highest kind of loan growth. However, if you look at sequential numbers, the sequential loan growth is at 4.4%, which is also steady. So if you look at the previous quarter's performance, in Q2, the sequential loan growth was at 4.76, then it came to 4.11, and now about 4.36. So there's nothing that you can complain, apart from the fact that there is slight hiccup in the asset quality. It has inched up. So if you compare the loan growth, which is at 4.4%, the gross NPA in absolute value has increased by 6.9%. But it is under control, because even at 1.3, when you compare to other corporate-based bankers, this gross NPA is on the lower side. Remember that as on Q2 FY18, 46.5% of HDFC Bank's books is in the corporate sector, and despite that, their asset quality remains the lowest amongst the large caps.
All right, so these numbers would go down as a more or less stable set of numbers to a mildly positive number. Abhishek, will that be the way you're looking at these numbers?
The NII growth also, if you see, is the highest. So it's not only the loan growth, it's also the net interest margin which is actually being pushed up. So overall, unlike what you saw in Yes Bank, wherein the loan growth was at 46-47%, but NII growth was at 25% on a YOY basis. Unlike that, over here, even if you check the sequential performance, the NII growth has been at 5.8%. So definitely there has been a margin improvement because your denominator has grown by 4.4% while your numerator has grown by 5.8%. So last quarter the net interest margin was at 4.3%. So this time it can be around 4.35, 4.4% levels. We don't have the details as of now, but overall this number looks steady and good.
Okay, all right. Let's get Lalitabh Srivastava, in fact, into this conversation. Lalitabh, you have had a chance to look at these numbers. As Abhishek was telling us, the loan growth has come in at around 28%. You have NI growth as well. That's flashing on the screen. And the gross NPAs, they have been more or less steady at around 1.29%. How would you read these numbers?
I think HDFC has performed similar to the trend that it has of a very consistent performance. The slight niggle in terms of asset quality is, I think, the only thing that you can take out. But even then, coming after a quarter, last quarter, when there were some issues with the regulator, and subsequently the bank had to recognize that an NPA. Even then, a 3 basis points increase in gross NPA sequentially, I don't think that should be taken in an adverse manner. I think overall the numbers looks to be quite good.
So even if you check, Nigel, as you know, I was working on the numbers, the PAT growth on a sequential basis is the highest in last, let's say, about 8 quarters. So if you take him from Q3 FY16 to Q3 FY18, you know, the PAT growth is at 11.84% on a quarter-on-quarter basis. So overall, not only has the loan growth come in, but it has come in at a profitable level. Yes. So even if you look at the operating profit growth on a sequential basis is the highest in last 3 quarters. So very good set of numbers coming in with stable asset quality. Nothing to worry about much in terms of asset quality.
Okay, stable to mildly positive. Abhishek has used that highest in terms of numerous parameters, you know, in terms of highest growth rate. So I think we would take this number more positive. In fact, all the 3 factors, they get a tick mark. And let's get a final word then coming in from our experts who have joined us. Manish, coming across to you, what would you do with the stock at current levels? What is your current, do you have a rating on the stock?
We have buy rating with a target price 2,200 rupees.
Okay.
2,200 rupees.
2,200 rupees. Great. Lalita, what about you? What kind of a rating do you all have on HDFC Bank at current levels? And you'll be looking out for some commentary, I think, coming in from the management. What would that be?
We have a buy rating currently with a price target of 2,100. The management commentary on, you know, how what will be the loan book growth and basically generally what is the pickup in the CVC category, that will be what we will be looking at.
Okay.
Retail has been performing very well.
All right. I think Krishnan has had a little longer time to look at these numbers. Krishnan, you want to get back to us with any further details? Now we have a lot more details that are flashing for you on the screen. We have the provisions as well that have come at around 1,350 crores. That's a bit of a reduction, if I saw that right, in terms of a sequential basis. Krishnan, come in.
Yeah, so the provisions, I think, will also include a residual portion of some divergence that has been reported by HDFC Bank this quarter. Remember, last quarter, they were anticipating a divergence report to come through. They held a provision against an asset around that. And in this quarter, I think they have made disclosures that there's still about 300 crores of residual NPA out of a 2,000 crore pool of divergence, right? So I think there could be provisions being held against that pool of NPLs for sure. So that could explain the spike that we are seeing in the provisions now. So that's partly my take, yeah.
Yeah, I'll just run through what Krishnan is mentioning. The divergence in gross NPA as on FY17 books, as reported in the press release, is at 2,051.76 crores. So that's about 2,052 crore to round off. And the provision divergence is at just 793.4 crores. So against 2,051 crores, the provision divergence is about 794 crores. So to run this again, the gross NPA as reported by the bank is 5,886 crores, but as per RBI, as assessed by RBI, it is at 7,937 crores. So the divergence or the difference between RBI's assessment and the bank's assessment comes to about 2,052 crores in the gross NPA. In the net NPA, As per bank, it is at 1,844 crore, but as per RBI, it is at 3,102 crores. So the difference or divergence in net NPA is about 1,258 crore. Coming on to the provision line, provision as reported by bank is about 4,042 crores, but as per RBI, it is at 4,835 crores. So the difference in divergence in terms of provision is about 793.4 crores.
All right, so I think that's the final word then on HDFC Bank. Gentlemen, thanks very much for joining in and taking us through these numbers. So overall, I think the numbers look okay for now. The stock has come off just a tad bit, but nevertheless, a steady performance.
To India Digital Open Summit 2018, where Mr. Akash Ambani, the director of Reliance Jio Infocom, is speaking.
Helps drive technology progression for areas of interest globally. AI is becoming one of the mainstream technologies. Voice assistance, recognition, command are growing on a daily basis in terms of usage. AI projects have leveraged open source to enable continuous innovation. There are so many examples of industry-leading AI projects that have been contributed by the open source community. Along with broadband, one of the key technology enabling infrastructures is cloud. The India public cloud market is estimated to be at $2.6 billion in this year, and in 2020, it will grow to be a $4 billion market. OpenStack, one of the world's largest open source, or the world's largest fully open source cloud project, is being leveraged more and more on a daily basis by more and more customers, including enterprise. It now powers over 60 data centers, including public and private clouds in the world, including ours, Reliance Jio's. And it's also being leveraged as core network management initiatives, including ONAP. Secondly, AR and VR. 2017 was a tipping point of AR and VR globally, with accelerated momentum happening in 2018. In India, AR and VR is in the initial stages of the adoption. But here at Jio, we believe that it will grow at a 50% compounded rate for the next 5 years. Blockchain. We've all heard so much around blockchain lately. 2017 was truly the year of blockchain and digital currency, highlighted by all the buzz surrounding Bitcoin. Beyond cryptocurrency, blockchain at its core provides a distributed ledger system for enabling secure transactions. One of the fundamental use cases of this was Bitcoin, but there can be so many others in so many different industries, including banks, healthcare, real estate, education, 5G IoT, and connecting billions of devices to provide always-on connectivity. We're fortunate to be living in India where we have a vision of digital India.
Okay, all right. Keep an eye on the markets. Unfortunately, what's happened right now is the mid-cap index has moved into the red. Oopsie daisy. Not looking too good. Advanced decline ratio as well. We were talking about those lines kissing in the morning. They kissed. At one point of time, we had more advances than declines as well. That was at around 10:30 a.m. odd. But now, in fact, the declines again, they've taken over. So I don't like this really. You know, the weakness being seen intraday. And a lot of stocks really are taking a bit of a knock. Just Dial in the morning, it was seeing some selling pressure. It did bounce back. It moved into the green. And now, in fact, it's slipped again. India Cements. I remember the stock moving with strength a couple of weeks back. It went to around the 200 odd mark. And just in around 6-7 trading sessions, you'll get knocked back by nearly around 10%. Reliance Infra has taken a knock. Reliance Naval as well should come up for you on the screen. And even a Shree Cement is slipping a tad bit. So there is some pressure being seen in the mid-cap index. Let's see whether or not this can get arrested, because morning we saw that in fact shorting this market is not making you too much money. The minute in fact you went to short the market in the morning, the market came roaring back and we were sitting with a gain of around 30 points approximately. But there is some pressure being seen in the mid-cap index, that's for sure. It could be some of those leverage positions, they're being taken out. But clearly we are seeing selling. A couple of other stocks as well, big gainers, Wellspun Enterprises. I remember the stock having a one-way run from 70 to 170. That one comes in for some selling pressure. So just keep an eye out on a couple of these stocks as we speak. But I think we can get you some opinion. Then the banking sector has been the center of focus as the government mulls a mega FDI push in the sector. They're weighing options to allow 100% FDI in private and 49% FDI in public sector banks. Let's listen in to Mr. Suresh Ganapathy, the banking analyst at Macquarie Capital Securities, what he had to say and what would be the likely impact.
First of all, in the previous case, RBI actually objected to this FDI increase because I'm not sure how comfortable RBI will be with the foreign shareholding being at say 100%, though it could be, of course, Indian incorporated and management control is in India, but I'm not very convinced whether RBI is going to approve this. Having said that, what is more important is that from an upside perspective, the fungibility is important because under the 74% there is fungibility of shareholding between FDI, FI, FPI and all. If under 100% they don't allow fungibility, then clearly the benefits could be limited. So fungibility is an important case for further upside and MSCI inclusion, all those benefits flowing into these private sector banks. They have improved a lot when it comes to their overall liabilities franchise. Look at it, right now 60 to 63% of their overall liabilities is coming from CASA and retail term deposits. Still, it's a tad bit lower compared to where HDFC Bank is, but nevertheless they have significantly improved the retail liabilities franchise. So it is not the same Yes Bank which we saw say 4 years ago where the dependence on wholesale funds was very high. So to that extent, if rates were to rise, I don't see a big reason why one should sell off Yes Bank. I think they're far more immune this cycle compared to what it had been say in the previous rising rate cycle. There is of course some correlation between rising rates and NBFC performance that actually is there compared to that in case of private sector banks, to be honest. So if rates were to rise, clearly the stock performance in the near term tends to be a bit more weaker, and I think that is going to happen in the near term, say in the next 3 to 6 months, because remember that these valuations are also very high for these NBFCs, right? So the room for comfort has been low. They have had the best liquidity and interest rate cycle situation possible in the last 3 years, and all those things are of course going to reverse. So so at the margin, clearly there is some downside in these NBFCs who are trading at very high valuations. Clearly from a valuation comfort angle, the only NBFC that we like in the near term is Shriram Transport Finance.
Mid-cap index continuing to remain under pressure, now down about 0.25%. But we just got numbers from HDFC Bank a short while back, and Lata is here to analyze it in greater detail for us. Lata?
No, actually, Abhishek analyzed it adequately. I just wanted to point out to one point which CNBC TV18 reported. See, between HDFC's recognition of bad loans, that is NPAs, and RBI's, there was a difference. RBI had asked HDFC Bank to recognize a further 2,051 crores as of March 2017, and Abhishek referred to that. Now, further to that note, HDFC Bank has also said, since then, out of this 2,051 crore, 1,707 crore of one account has been upgraded. And why has it been upgraded? Because at the Joint Lender Forum, which is a consortium of bankers when they meet, all the bankers said that since the past 4 quarters, the payments have been coming regularly. And when payments come regularly, an account can be made standard under RBI books. So of this 2051, we have already made 1,707 crore of one account standard. I wanted to come and specifically say this because this ties in with what Ritu Singh reported. She broke the story earlier this week saying that JSPL is an account which the Joint Lender Forum has said has paid regularly the interest for the last 4 quarters, and under RBI rules, it could be upgraded. It should be upgraded. HDFC Bank giving us that number. Of course, they don't mention the account's name, but it ties in very nicely with what Ritu Singh told us. So I think when Axis Bank numbers come, we should be hearing something similar. That part of that, I think theirs was some 4,000 odd crore of divergence. 1,700 or whatever is their exposure, I do not know. Some 1,500 crore of that would again be upgraded. So this is something positive, and I just wanted to put it on the table that Ritu Singh told you that first, that you should expect this in not just HDFC Bank and Axis Bank, in SBI, in several others who have exposure to the JSPL account.
Okay, all right, Lata. Thanks so much for joining in, keeping us aware about that. So HDFC Bank is the one, in fact, that has, that has had that kind of repercussion. But keep an eye out on Manappuram Finance. The board is likely to meet on January 23rd to discuss investment proposals, and that's why the stock, in fact, is spiked up. I think at the start of this, at the start of this hour, the stock was trading the red. Now, in fact, it's spiking up. It's up close to around 4% from the low point of the day. So we'll keep an eye out on that one. Lata, you want to comment on this?
I just wanted to say that for the longest time we thought that Rajiv Lal was also speaking to Manappuram. And he had specifically said, yes, we are speaking to Manappuram, but we are speaking to a whole lot of people. This was in November after the Shriram deal fell through. And don't believe that we have hold in on Manappuram. And later, of course, we realized. So Manappuram and many other finance companies have been looking for strategic tie-ups, and maybe something is on the anvil quite clearly. Otherwise, why would they call a board meeting primarily to discuss it?
Okay, all right.
Well, actually, I think we've got Yash with us.
No, I don't think Yash is tracking the Manappuram finance story, is he? We'll get to that in a bit.
We'll get to that in a bit. I think we should. I think we should first focus on the markets for now. We have almost moved into the red. So let's just focus on the Nifty. It's seen a sharp downtick in the last few minutes. We have almost moved into the red. So just keep an eye out on that front. And pull up a few of these stocks in the broader markets as well. The mid-cap index is now down 100 points. So I think it's a good time to get in Ashwini Gujral. Let's pull in Ashwini Gujral. Ashwini, how would you trade the Nifty? We didn't see follow-through. You were spotting that in the morning as well. We are more or less, we are almost in the red as we speak. Ashwini, come in on this. How would you trade the Nifty?
See, it's clear that the mid-cap correction kind of continues. But I don't think it's savage right now. But on the Nifty and Bank Nifty, there is no, big correction. And there, the large caps, you should still be buying into them, because by the close, things could again turn around. So this is a very distinct type of market where large caps are doing well, but mid caps are not. But today you have, I think, the third day of a mid cap correction as well. So possibly at lower levels you are likely to find some buying. So this is probably a good enough time to cover your shorts and get long on the banks. Hardly 2 or 3 banks are in the negative. So chances are that any sort of recovery will be led by the banks.
Okay. Ashwini, what about your trading ideas?
Well, KRBL is a buy with a stop of 630, target of 665. Dewan Housing is a buy with a stop of 590, target of 625. And India Cement is a sell with a stop of 185, target of 170.
Okay, all right. I think we should just keep an eye out even on Manappuram Finance. I remember Abhishek here on CNBC TV18, he had broken that story that in fact the promoter is looking to cash out. So just keep that in mind. The stock has recovered a goodish bit from the low point of the day as well. But Prakash Gaba as well is with us. What picks do you have for us on this Friday?
I have long one short, Nigel. India Bull Housing looks good, can climb to levels, I would say, perhaps closer to 1300 zones. Stop below 1240 zone should be fine on India Bull Housing Finance. Stocks that look weak is Ashok Leyland. Can see a slide to 116 zone, stop about 122.
So there's some stability that's come about in the last few minutes, so that's good news. ICICI Bank is fighting for the bulls, so pretty good news coming in there. And in fact, if you just take a look at a couple of stocks that are moving around, DCB Bank, that has recovered from the low point of the day, so keep an eye on that one. And EIL as well has recovered a tad bit. The breadth of the market, though, that's not encouraging at all. So the advanced decline ratio is telling you the picture. We have close to around 2 stocks that are declining for just 1 stock that's advancing. So that as well should come up for you on the screen. But Wonderla Holidays, in fact, that's the stock in focus. It was trading in the green. Remember, it received a major boost after the GST rate on amusement as well as theme parks. That was slashed from around 28% to around 18%. And that explains why, in fact, the stock is buzzing in today's session. The impact, to understand what the kind of impact it will have on them, we are currently joined by Mr. Arun Chittalupilli, the MD of Wonderla Holidays. Hi, Arun. Thanks so much for joining in. Well, if you could give us a sense of, this GST reduction from that 28% to 18%, was it having any material impact on footfalls? Do you see this as, positive for your company?
Yeah, so Wonderla is one of the companies which has been adversely affected by GST because our effective tax rates have gone up substantially ever since GST came in. Our tax rate before GST was about 15% or 16%, and now that has become 28%. And now with this correction, it has gone back to 18. So correct. I think that will, definitely bring down our prices by about 10% for the end user, and that should definitely help us with our footfalls.
Okay. But had you seen footfalls fall primarily because the GST rates had gone up, and therefore with this cut now, do you expect a substantial increase?
So as a company, we've always followed a policy of passing on any taxation to our customer. And when the GST regime kicked in, we had increased our prices to, pass on all the price, the impact to the customer. And we had seen a decline in softening of our demand for the last, almost a year or so, especially. So we're hoping that this will help us, revive some of the footfall.
Well, Arun, do you have some numbers if you could share that with us? Now, for FY19, assuming that this stays at around 18%, what kind of a footfall number are you looking at? As you said, the first half of the year, there was a bit of a contraction in terms of that footfall number.
It's too early to say, but the news is still very new for us. We are hoping that we should be able to claw back some of the losses, especially from the group section, which is more sensitive to prices going up, and we are hoping that that section will revive, and the real impact of this hopefully we'll see in the next financial year as well.
All right, Arun, we'll leave it at that. Thanks very much for joining in. And we hope this bit of a boost in terms of a GST rate cut will help.